Hello traders, welcome to your daily market update for Wednesday, the 18th of March 2015, and we have a very exciting news night tonight. We have the Bank of England's minutes coming up, and that will be quite important as Carney has recently expressed his concerns over the high pound and its impact on inflation, and that has been weighing on the UK's currency. And tonight will be the opportunity for Carney to either add fuel to the fire and express his concerns, and also potentially indicate that rate rises will be done slowly, gradually, and not in the ultra near term as well. We'll also be keeping an eye on the vote to raise rates and cut rates once again. Now, if there is no change and we still see 9 members voting to unchange the interest rate, there will be a sell-off attributed to that, because it means that no members are looking at considering the chances for raising rates anytime soon. We need to see a shift in the votes before we will start to see the minutes reflecting the members' view and outlook towards raising rates in the near term. So that will be an important outcome, and we'll have a look at the technical charts and we'll talk a little bit more about the Bank of England's minutes and what that can ultimately do. But here is the very important, it's the federal interest rate decision and the policy statement. That is the most important piece of information coming out this week, and in fact this month, as it's going to be one where the press statement as well as the initial statement will quite possibly add a lot of volatility to the market. So let's do away with the minutes and we'll get into the charts and we'll talk a little bit more. But first up, we've seen a big sell-off on the New Zealand currency, and that's on the back of threats, terrorist threats that they will poison the formula for infants in terms of dairy, and Fonterra's stock sold 7% overnight, and the currency has been affected as well, as their economy does highly rely on the back of dairy products. So although the government hasn't seen any further comment from any further terrorist activity, so we may see the impacts of that start to fade away in the coming sessions, unless there is further conversations and further threats to continue. So, but the market has reacted, and we'll see what happens into the future. But moving on to tonight will all be about the US dollar. And as I said, we are in a holding pattern here. We do have support and we do have a strong resistance level. And I do expect a breakout of this at some point tonight, potentially with high levels of volatility with the US dollar. The Australian dollar come off a little bit as well, but it wasn't just due to any factors other than the economy and the interest rate statement coming from the RBA on Tuesday. But we are still holding up above the 76-cent support level, and I think if we start to see a significant move below that, that will indicate that the momentum is definitely getting back with the bears, and we'll see a lower price in the near future. If we have a look at the daily chart, we are still in this big downtrend. If I zoom out for you, it's a downtrend that's just continued, and it's one that's been reflecting the economy, and it's going to take a relatively big shift in either the Australian or the US before we actually can expect a significant bounce, a bounce where it wouldn't be a good opportunity to get in at higher prices as a dead cat bounce. And tonight we may get that. I'll talk a little bit more on that on the Fed interest rate in a second. And we have the pound. Now the pound's been sold off, and that's due to Carney's comments about how the high interest rate can potentially affect their economy. And we broke that $1.50 massive psychological level, and it's fallen. We did have a little bit of a bounce as we've seen some US dollar profit taking, but the selling has continued as people get nervous last night. And we had some relatively quiet and non-existent data coming out of the Eurozone. So it was just purely due to people a little bit worried about what we have coming up. Now, we do have a resistance level formed last night here, and we do have support at $1.47 here, and we could see a breakout either side of this based on the combination of the Bank of England's minutes, but I quite definitely think the Fed statement will also create some volatility there as well. The euro has had a bounce, but once again, it's failing to break above and make some new higher highs. So that's an indication that there's still a lot of sellers and still a lot of pressure there. So without getting too carried away, I'd like to say that we do have resistance here, and a breakout of $1.07 would definitely indicate a move to the higher side. And we do have support, which has still remained here at $1.04.5. And I think that tonight's Fed decision will definitely break it out on either side. Now, before I get into the US-based pairs, I should start talking about the Fed. And there's a lot of talk about how the Fed will release the key word of patience tonight. However, there will be, on the back of that, a very big bullish spike in the US dollar, because it's a word that they've mentioned will indicate that they are looking to raise rates sometime soon. And I think the Fed will continue to maintain that stance and also affirm with the market that they are looking to raise rates this year. However, I also believe that they're going to move to a data-dependent decision on when they will raise rates. Okay, so it's not going to be a situation where they just come out and say that we're going to raise rates and away we go. It's going to be, we will raise rates when XYZ data hits a certain target, and then that will allow us to raise rates. So it will become a data-dependent decision. Now, what that means is, with that, we will see the market then potentially sell off, and we will have an opportunity tonight for some whipsawing. And I think that the US dollar overall tonight will ultimately have a bit of a pullback, and we will see some profit taking. However, I think it will be short-lived. Not short-lived in that tonight we will see it spike higher because patience is removed and people will pick that up initially from the statement, but then also all of a sudden sold off again due to the comments made later on about the data dependency, and then all of a sudden start rallying again because it's going to be a short-lived pullback. What I'm saying is, I believe that the pullback will continue this week, but the market will start to do some digging around and some research and realize that overall what the Fed is saying is very positive for the US dollar and very positive for the economy, and they're simply setting themselves some data-dependent targets for the market to meet before they initially look to raise rates. And ultimately, in the past, if you look at this, it has been very bullish and very positive for the US dollar, mainly with a 3 to 6 month outlook from making that decision. So we could initially see the spike in the US dollar, and then as the minutes come out, we could see it actually have a little bit of a pullback. So all I'm doing is warning you that there could be some whipsawing tonight, so be careful of that. Don't get sucked into the initial move and loading up on your positions and think you're going to bank big tonight, because you could actually get whipsawed out and end up in a world of hurt. So keep that in mind. But overall, I think that the news will be negative for the US dollar in the short term, but in the next 3 to 6 months, we will see another US dollar bull market continue. And it is going to be a healthy pullback overall. So what that means is we could actually get, from the positive data we've had from the euro, we could actually get a breakout here of the $1.07, and we could see it move higher and get up into here in the coming trading sessions. So that's a trade of a breakout that you could possibly look for. Initially, we might see some spikes going down. Whether we take out this low or not, I'm not too sure, but it's not something that I'm looking for or chasing or trading. If you're fast enough on the trigger finger and you want to be a reactive trader, and as soon as that initial statement is released, and if the word patience is removed from it, the market will go US dollar bullish and you want to get in and get out and pick up a few pips, so that's entirely up to yourself. If we go back to the Great British Pound, I think that from what I'm saying, we could actually, this is a hard one because we have two pieces of data to consider here. We do have the pounds data where it could be ultimately a little bit weaker, and he could continue to express his concerns with inflation being not as strong as they would like, indicating that they aren't looking to raise rates just yet. And then we could get the US data to follow, and we could get a slight bounce, and it may not be as aggressive of a breakout through here as what some other currencies are potentially doing, because we already have some weak pound data. But the Australian dollar could actually also have a bounce as well. And if that's the case, the initial move could be weak, and then we could get a return bounce and come back up and test this downtrend line. But in terms of long position trades, right at this second, I don't see an opportunity, but we'll have to wait and see what happens initially. The US dollar CAD, however, and the US dollar JAP is going to be an interesting trade because, as you can see here, we've had a breakout of this triangle, and we could potentially initially move higher, and there could be an opportunity to get in as the US dollar bulls start anticipating the Fed removing the statement of patience, and we could take out $1.28, and we could be moving higher at the initial move, but then we could start to pull back. So there might be a breakout trade opportunity there as the patient statement is removed, and we see the commentary after follow and potentially impact the US dollar. So you could pick up some money between that period. Now, the US dollar versus the Japanese yen has consolidated heavily, and that is in anticipation of this statement. So keep that in mind, and as we zoom in here, you'll notice that there's two key levels. It's 122 and 120.6. Now, this is a tight consolidation, and I believe we will see a breakout either side. So there is definitely a trading opportunity here, and I believe it's all purely a US dollar trade, and the Fed decisions, the Fed's commentary will indicate to us exactly what the market is going to do. So there's going to be the opportunities. Keep an eye on these levels. Don't get wrapped up and too excited in the initial move. As I said, that for many of you that are new traders, there is an opportunity here and a potential that this could be one of those statements that actually whipsaws the market and creates a little bit of pain for yourself. So just bear that in mind. Good luck tonight. I will be definitely trading this. I will be posting some information on Twitter, my thoughts, and leading up to the news as the charts become clearer moving into the start of the US session. I'll be posting any charts and any potential opportunity as well as my commentary. Trade well and keep those stop losses tight. Don't get enthralled into the volatility.